Hello, I'm Haider Malik, host of the Mehmi Financial Group podcast. Today, we're spotlighting Winnipeg's role as Canada's heartland trucking hub. From grain haulers to intermodal carriers, Manitoba based fleets power supply chains across North America. As demand grows, expanding your fleet means securing capital without jeopardizing cash flow. Let's explore tailored financing strategies for Winnipeg operators. First, consider regional term loans. Many banks and specialty lenders in Manitoba offer loans specifically for truck acquisitions and upgrades. These programs typically finance 80 to 100% of the purchase price over 5 to 7 years. To qualify, you'll need a solid 2-year operating history, proof of tonnage contracts, and a credit score above 650. Partnering with a broker experienced in prairie logistics can package your revenue projections and equipment valuations for the strongest lender proposals. Next, equipment leasing provides flexibility. Operating leases rent vehicles without ownership risk, often including maintenance packages, critical during harsh Winnipeg winters. Lease terms of 36-60 months match the typical life cycle of heavy-duty tractors in prairie climates. Finance leases act like installment loans, granting ownership at term end for a nominal fee. Leasing preserves working capital and keeps balance sheets lean, but watch mileage caps and wear and tear clauses given the long hauls through Manitoba's remote corridors. A revolving line of credit tied to receivables or inventory can bridge seasonal fluctuations. Winnipeg shippers often face cyclical grain harvest peaks and off-season lulls. Lenders may advance up to 70% of outstanding invoices, providing cash for fuel, driver payroll, and maintenance when revenues dip. Compare advance rates, renewal fees, and recourse terms. Non-recourse options cost more but shield you if a customer defaults. Invoice factoring is another option for fleets with extended payment terms. Factoring firms advance 80-95% of your invoice value within 24-48 hours, collecting payments from brokers or shippers on your behalf. Seek a partner familiar with agricultural and intermodal receivables. They'll navigate seasonal payment cycles and offer competitive advance rates. If you own trucks outright, a sale-leaseback can unlock tied-up capital. Sell equipment to a finance company and lease it back under an operating or finance lease. This injects liquidity for new acquisitions or working capital needs while you continue operating the same trucks. It's especially effective when upgrading older units to meet emissions regulations or GPS telematics requirements. Government-backed programs can enhance any financing mix. Under the Canada Small Business Financing Program, you can access loans up to $1 million with shared risk. Manitoba producers also benefit from provincial incentives for low-emission vehicle upgrades. Combining rebates with federal clean technology grants can cover up to 30% of incremental costs on new or retrofit equipment. Local credit unions and lenders like Assiniboine Credit Union and Manitoba Opportunities Fund understand the region's trucking dynamics. They may offer relationship-driven products with flexible underwriting, stepped interest rates, or reduced collateral stipulations. Cultivate these partnerships by maintaining transparent financial reports and demonstrating operational stability. Before committing, perform a side-by-side cost analysis. Evaluate interest rates, fees, residual values, covenants, and tax deductions. Model your cash flow under scenarios, spring thaw delays, fuel price spikes, or cross-border congestion, and stress test your financing plan against disruptions. To get started, follow 3 steps. 1. Assemble your financial package, year-to-date profit and loss statements, aged receivables, equipment inventories, and customer contracts. 2. Engage a prairie-focused finance advisor or broker to access multiple lenders and negotiate terms. 3. Compare offers on true cost of capital, covenant flexibility, and added services like maintenance support or telematics integration. Finally, monitor covenant metrics, debt service coverage ratios, and loan-to-value thresholds quarterly. Use internal dashboards or your advisor's reporting tools to track performance and alert lenders proactively to any strain. This keeps your credit lines in good standing and readies you for future expansions. That's our guide to financing fleet growth in Winnipeg's trucking hub. By blending regional term loans, leasing, receivables financing, sale-leasebacks, and government programs, you can secure capital that aligns with prairie-specific needs. Thanks for listening. I'm Haider Malik. Until next time, keep your wheels turning.